Well, we've got a new debut at the Nasdaq, the world's leading carbon negative materials company, coming to market through a SPAC merger with Artius Acquisition Corp. And to discuss the transaction, let's bring in the co-founders of the company, John Bissell, Origin Materials co-founder and co-CEO. We've also got Rich Riley, Origin Materials co-CEO. It's good to talk to both of you today. John, let me start with you. Certainly a big day for the company. How does this debut allow you to take this company to the next level? How are you thinking about the next phase?
Yeah, I mean, the next phase for us really is deployment of the technology at scale. And what this does is it gives us the capital that we need to achieve that scale. You know, one of the interesting things about climate or carbon negative technology is that it tends to be rebuilding our physical infrastructure in a lot of ways. And rebuilding the infrastructure, again, you know, it's a capital intensive activity. And so this is really critical for us to achieve that next phase.
And Rich, I mean, when we talk about getting there, obviously the partnerships you guys have formed are pretty important in a lot of these companies trying to turn to your technology to improve what they've been able to do when it comes to renewables in some of this packaging and resources there. I mean, how important are those? Which ones are you seeing form right now, and which ones are you looking forward to as you grow?
Yeah, well, you've just seen this tsunami of companies announcing their net zero and sustainability goals, and they are trying to decarbonize and transition their materials, and about half of their emissions footprint comes from the products that are made. And so that's where we come in. And so we're able to provide, you know, carbon negative materials from sustainable sourcing, and it's something that companies very much want right now.
Rich, when you talk about just the new focus for a lot of these companies, it does feel like increasingly they're having to act largely because the shareholders are demanding it. How have you seen the investment picture change for these companies as climate becomes more and more front and center?
Yeah, when we meet with these companies, it's very clear that their shareholders are demanding it, their customers are demanding it, and so there's a lot of pressure on these companies to figure this stuff out. And so that's where we're able to show up with a solution that drops right in for them and is cost competitive. And so there's a lot of interest in solutions like ours.
John, we chatted last time about the technology and how you're able to do this, and maybe the reducing costs or improved margins in doing this as well. It's never bad to recap how it all works for our viewers out there. Maybe just walk us through that again one more time.
Yeah, sure. So what we really do is we start with sort of woody materials, and that can be anything from wood waste and residuals, byproducts of the forest industry. We take that, we convert it chemically using, you could think of it as sort of like a digestion process, into two intermediates. Those two intermediates are really chemically flexible, and we can make all sorts of different things from those. And that's really what makes this a platform, is we do a lot of the work just to get to those two different intermediates, and then we have a shorter path to get to all the different physical products that we use in the world. So that's really the key, and it's synthetic chemistry, which means it's very, we call it atom efficient, right? So every atom that goes into the process, every carbon atom is coming out as a product for the most part, and that's really the core. So it's synthetic chemistry, it's using lignocellulosic or sort of woody materials as the feedstock, and then it's a very carbon efficient process.
John, how quickly can you scale up the business, especially at a time when we are seeing huge momentum in this space? Walk me through your thinking right now as you begin your journey as a public company and look to really try to capture that demand.
Yeah, one of the benefits of synthetic chemistry is that we as a species understand how to scale synthetic chemistry incredibly well. We've been doing it for a couple centuries now, and it's essentially what the entire modern world has been built from. And so as a result, we can scale this kind of technology very quickly. And basically what that means is we can go to 1 million tons a year kind of scale with each plant. And we're building our first plant right now, Origin 1. That'll be done end of next year. And then we have our second plant, which is really the world scale plant, the first world scale plant. That'll be done in about 2025. And that's a typical sort of time period for capital projects of this scale. But what's nice about that is you can really deploy large chunks quickly from there on out. And so we see a pretty quick scaling curve going on through this decade.
And lastly, I don't know if this one's better for John or you, Rich, but when we talk about SPAC deals versus the traditional IPO route here, I mean, how does this deal set up Origin Materials from the get-go here now as a publicly traded company to really follow through on some of those proposals and growth initiatives?
Yeah, so for us, the SPAC was a fantastic choice. We have a proven technology, billions of dollars of customer demand, and we need to raise a large amount of capital as quickly and with as much certainty as possible to build the plans John was talking about, to connect those dots and deliver these materials. And the SPAC market provided just that for us. And we hear from public market investors all the time, this is what the SPAC process was meant for, companies like this.
Well, it's good to talk to both of you on this day. John Bissell, Origin Materials co-founder and co-CEO, and Rich Riley, the co-CEO as well. Good to talk to both of you.